Hello everyone and welcome back to another financial planning video. My name is Erin Varghese and I'm a financial planner here at Pure Portfolios. In today's video, we are going to be talking all about updates that came in 2023. So as you are finishing up your taxes in 2022 and planning your finances for 2023, this video could be of help to you if you are working, retired, or somewhere in between. So in our video today, we are not going to be going into too much depth and detail of the nuances of these different limits and contributions. Is going to be very high level just to kind of get you thinking and get you on the right path. So first on the list, we are going to be talking all about contribution limits in regards to retirement. So if you are working and you have an employer-sponsored retirement plan, such as a 401k, 403b, 457, or a SARSEP, you can contribute $22,500 in 2023. If you are over 50 years old, you also have the ability to do a catch-up contribution. So this means you can contribute an additional $7,500 for a total of $30,000 in the year of 2023. Now again, we're not going to go into too much depth and detail, but you can take a look at the screen and find what applies to you. But the other one that we'll go through is IRA and Roth IRA contribution limits. So for this year, there was an additional $500 increase to $6,500 a year. Again, if you're over 50, you have that extra IRA catch-up. So keep in mind that between the IRA and the Roth, these are not separate contribution limits, they are together. So for example, if you are contributing $7,000 for the year, you could contribute $4,000 to the traditional IRA and $3,000 to the Roth IRA. Any number of splits works, but just keep in mind that that contribution limit is combined. Don't forget, for traditional IRAs, deductions start to phase out depending on your adjusted gross income level. So this also depends on how you file your taxes. If you're single, married filing jointly, married filing separately, you have different kind of parameters to work around in terms of deductibility. So for traditional IRAs, if your income is above a certain level, you can't deduct the full amount of your contribution on your taxes. So make sure you talk to your CPA or your tax advisor about what constraints apply to you. Similarly, for Roth IRAs, there are contribution limits based on your adjusted gross income as well. So in married filing jointly, for example, if your adjusted gross income is between $218,000 to $228,000, you may not be able to contribute the full $7,000 for your Roth contribution. So again, always make sure that you are following up with your CPA or tax advisor to ensure that you are following all the rules. Next, we are talking about health savings accounts, or HSAs. This is a pretty simple one, but if you have a single or self plan or a family plan, your contribution limits are going to be different. So in 2023, you can contribute as a single person $3,850 to your HSA, and if you have a family plan, you can contribute $7,750. The catch-up contribution limit is a little bit different for HSAs. It's 55 and older, and again, you get that additional $1,000 to contribute. HSAs are a great triple tax advantaged account where contributions are pre-tax. They are going to grow tax-free, no capital gains or losses when you're buying and selling securities within your HSA, and all qualified distributions are going to be tax-free as well. So it's a great tax advantaged vehicle to use for health related expenses. One big thing that we often see with HSAs is that contributions go into the HSA but don't actually get invested. So make sure that you are taking advantage of all aspects of your HSA. Okay, just an update on the standard deduction. There was another increase in 2023. So if you take the standard deduction and you file single, you get $13,850. And if you are married filing jointly, you get $27,700. Feel free to pause the screen if there is something here that you want to take a look at, but we are going to move on to the next one. Next, we're going to be talking about gift taxes. So in 2023, there again was another update to the gift tax exclusion amount. You can gift to any number of people $17,000 a year. Now, you can give that to any number of people, but per individual, $17,000 is the limit. Now, can you gift more than $17,000 a year? Absolutely. Just because you gift more than $17,000 doesn't mean that it is going to be a taxable event, but you are over the exclusion amount at that point and do need to report it on your taxes. As always, follow up with your CPA or tax advisor to ensure that you are properly reporting and recording your gifts for the year. Next, we are talking all about Social Security. So if you are already receiving Social Security, you probably see this reflected in your monthly payments, but Social Security did get a cost of living or COLA adjustment in 2023 to the tune of 8.7%. If you are not receiving Social Security yet, go ahead and pause the screen. You can take a look at the age table down below in that Social Security FRA, that stands for full retirement age, so you can see what your full retirement age is. Last but not least, let's talk about RMDs, or required minimum distributions. In the last several years, there have been many updates, and it can be hard to keep track of all of these updates, so that's what we are here for. In 2019 and earlier, the RMD age was 70 and a half, which was about as clear as mud for most investors. In 2020, with the Secure Act that was passed, that age got delayed to 72. Secure Act 2.0 was actually passed in December of 2022, and the age was then delayed again to 73, and for others is delayed until 75. So if you turn 72 in 2022, you may not need to take your RMD just yet. Now, always remember that with the RMD age, you can always take out funds from your IRAs prior to your RMD age. But once you reach that RMD age, that is when you are, like the name says, required to take a minimum distribution from those accounts. So those are the most important factors that we feel you should be paying attention to in 2023. As always, you can send your questions and feedback to us at insight@pureportfolios.com. We'd be happy to answer any questions that you have. So thanks for listening, thanks for watching, and we will see you in the next one. Bye.